Will the RBA cut the cash rate? Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee, because I'd like to have a look at this article on news.com.au written by Gerard Coburn discussing, well, Philip Lowe hinting that we may have additional cuts to the cash rate. Now, just to refresh your memory, the cash rate at the moment is at 0.25%. It's not as low as other parts in the world. Recently, we looked at Canada opening their doors to the prospect of negative rates. We looked at the UK considering the prospect of negative rates, going so far as to look at what the impact would be, or ask what the impact would be to banking organizations. I've had viewers who work in the IT industry tell me in the comments that banks have been preparing for this for some time. Now, the question is, will that mean we could potentially hit a rate cut here in Australia? Or could it even go negative here in Australia? And how effective is it going to be? Think about it. You know, another rate cut. Okay, your mortgage will go down a little bit more. You know, say, you know, they cut it down to 0.1 and the bank passes on 0.2% of that to you. That'll be a little bit more money in your pocket. Do you think it's going to make absolutely any difference? This is the problem. The more they cut rates, the less effective they are. The rule is you've got to cut between 5 to 6% to kind of restart the economy to avoid a recession. And the counter argument is, will it just scream desperation? And will people go, well, if they're cutting it that much, that's just insane. And let's have a look at this video here. Just a clip about Philip Lowe, where he's talking about negative rates here in Australia. And one of... Hang on, wrong thing.
Is that in many countries, there's increased concern that negative interest rates encourage people to save more, not spend more. Imagine I tell you, you put money in the $100 in the bank, and in 5 years' time, I'll give you back $95. That's what negative interest rates mean. And in response to that, we're seeing in some European countries and in Japan, there's some evidence of this as well, that people say, well, because I'm going to get less from the bank in 3 or 4 years' time, I've got to save more. So negative interest rates can become contractionary from that perspective. So reduced supply of credit.
So I thought that was an interesting insight just into negative interest rates, how it doesn't actually have the effect that they're hoping. And I'd say that would play into confidence, consumer confidence. Sure, confidence has shot up now. It's just shot up at the beginning of a recession. But our savings rate, everyone, our saving rate has gone up higher. We can jump here. We can see, hang on, I'll just find it. This is from the RBA snapshots that I've done. Here we go. I've done it in another video. You can see household savings ratios at 19.8%, which is just crazy high at the moment. It's very high right now. So if we go into negative rates, that might go even higher because people are probably more worried and they're going to save more. So we'll see. But then again, who would have thought that rates this low would have even been possible? Even possible. So, I mean, here we go. More cuts. The Reserve Bank of Australia has hinted at the possibility of another interest rate cut to support the country's economic recovery from the pandemic. Speaking at the Citigroup Annual Investment Conference on Thursday, RBA Governor Philip Lowe said further monetary easing would support jobs growth and alleviate currency pressures. Mr. Lowe said risks associated with the country's financial stability still needed to be examined before a decision was made. However, lower rates would have better traction now than at the beginning of the crisis. Really? Really? Let's have a look at the ASX, and I'm just going to unplug this. At the ASX rate, interest rate calculator, interest rate prediction. We can jump over here. So here's the rate tracker, and as the time of recording, well, decreased to 0%. 0%, this was yesterday, on the 15th of October, there was a 73% chance, or 73% expectation that we'll get a cut to 0%. What do you think, everyone? I mean, 0% rates. Who would have thought? Who would have thought? Mr. Lowe said risks associated with the country's financial stability still needed to be examined before a decision was made. Oh, we've already looked at that. When the pandemic was at its worst and there were severe restrictions on activity, we judged that there was little to be gained from further monetary easing, he said. As the economy opens up, though, it is reasonable to expect that further monetary easing would get more traction than was the case earlier if they continue to allow the economy to open up. If they clamp down on it more, that might all get thrown out the window. The RBA has said an increase in the cash rate will not occur for at least the next 2 to 3 years, or until inflation is within the bank's target range of 2 to 3%. The central bank will make its next monetary policy decision in November. In March, the RBA slashed the official interest rate to 25 basis points as the result of the pandemic. It also implemented bond buying measures and a term funding facility to ensure the country's banking sector had ample access to liquidity. Economists are predicting an interest rate cut of 15 basis points could occur at the next RBA monetary policy meeting, which falls on the same day as the Melbourne Cup. Is the Melbourne Cup even running this year? What's it going to be like if we don't have, the news plastered with drunk bogans getting pissed in well-dressed and people acting like fools? What's going to happen to Australia, guys? I remember the last time I went to the races up here, and you drink a lot on Melbourne Cup Day. In his speech, Mr. Lowe touched on the high levels of debt revealed in the federal government's October budget, assuring the largest deficit since the Second World War is entirely manageable and in the national interest. For a country that became used to low budget deficits and low levels of public debt, this is quite a challenge, Mr. Lowe said. But it is a challenge that is entirely manageable and affordable. It is the right thing to do in the national interest. Debt across all levels of government in Australia relative to the size of our economy is much lower than in many other countries and is likely to remain so. So, we're bad, but there are places that are worse than us, so we're better by comparison, guys. Better by comparison. That's it. We're going to meet market expectations. The RBA governor also noted Australia's two-speed economic recovery was being exacerbated by Victoria's continued shutdown, which has hindered the second most populous state's spending and job numbers. For the month of August, retail spending in Victoria was down 11% compared with the start of the year, while retail spending across the country increased by 13% over the same period. The number of jobs in Victoria are down 8% compared with March, with Mr. Lowe noting small businesses having been more impacted by the economic lockdown than large corporations. Yes, it definitely is turning into a K-shaped recovery, isn't it? It really feels like one could say the middle class is going to be destroyed. Going to be destroyed in Australia to a large extent, taking most of the burden. Our civil leaders, our politicians, our bankers, they're not going to cop it as much as we are. So what do you think, everyone? Do you think predictions of 73% of a rate cut are accurate? Will it make any difference at all to your spending habits or to your business decisions? You know what it'll do. It'll increase the borrowing capacity for everyone out there who's taking advantage of all of these government stimulus schemes. We saw home builder, new building sales, new home sales beat expectations by 700% or more than 700%. It's just going nuts. Building approvals are up. So now, even with a rate cut, it probably isn't going to make a difference to those of us that have a mortgage, that are watching it. We're fine. We're in it. Fantastic, a little bit extra money. Are you even going to bother adjusting your repayments or just let it run? But it'll be all to the newbies that are jumping in, that are getting that 5% government guarantee. Wow, now they can borrow even more. Honey, let's get the extra bigger house, or let's get, spend more on fixtures and fittings. Let's buy the 5-bedroom house that we're never going to fill up. Because what if someone visits once in a blue moon? What do you reckon? I think that'll be the impact. And then what'll it do? It'll drive up house prices. It'll keep house prices shooting up. And we'll continue the growth in this sector. All of it is another little prop to keep this housing bubble going, to keep pushing it up, everyone. Is it really good for the nation in the long run? That's the question. Let me know your thoughts and opinions in the comments below. What do you think? You think we'll get a rate cut? Do you think it'll put more upward pressure on house prices, or just keep it from falling as much as they can? And do you think we will actually see negative here in Australia? If some other countries do, we may have to follow along. As always, let me know your thoughts and opinions in the comments down below. Please like, share, and subscribe to the channel. If you're a fan of the channel and want to support us, there are a few ways you can. Simply interacting with the channel, sharing the videos, getting out there, helping the channel grow. I really appreciate it. We've just crossed over 19,000 and we're heading towards 20. Thank you all very much. I'd like to get that by the end of the year. I need to do something special. That's going to be effort. I won't be organized. We'll see. If you want to support us as well, you can join the channel on YouTube or Patreon. Support us using any of our affiliate links you find below: Amazon, eBay, Independent Reserve, or Kucoin. Buy a merch from Teespring or from the HeiseSays blog, where you can get the pocket squares. You can see right behind me there. There's one. Or you can support us using Gold Pass or PayPal. Take care, guys. Have a great day. I'll see you in the next video.